Yeah, maybe this will work a lot better with the sound on. All right, that's just great. Okay, hope everybody's having a good fall evening. We're having a decent evening here in Pittsburgh. And the only disappointing news today was that the barn wasn't started today. It's being started tomorrow morning. So anyways, as we can see, after the whipsaw action right in here, they told us which way they were taking it. They're still taking this down. And this is why you have to wait to the end of the day to see what the signal or pattern is going to be. In this case, in the early part of today's trading, they were bobbing it around. It was very indecisive. It looked like they could be possibly supporting right here at the 200-day moving average. But as we saw as in a downtrend, they were trading a positive in the early part of the day and selling it off in the afternoon. So the direction of the trend will usually be in that, the direction of the trend will usually be in that direction. That's great. Direction of the trend needs to see a tremendous reversal signal to tell you there's been a change, and or if they were using the 200 as a support area. As we can see now, the Dow actually used the 200 as a resistance area and then started trading off from there. The NASDAQ, I didn't make it to 4 Ligonier days. Actually, we went in the opposite direction. We went up towards Youngstown to buy some antiques. The NASDAQ also used the 200 as a resistance, trading lower. The S&P obviously wasn't going to use the 200 as support, and the transportation index started selling off the earliest, but notice where it came to. It almost came right back up to the T line. Looked like this is where they were supporting, and then slam, they took it down. Now, I found out about Hershey too late. Sandy was actually flying in late Sunday or Friday night, so she was recovering from her trip to Corpus Christi. So I missed Hershey this year. Anyways, what happens when the market keeps selling off? Two things are going to happen. We're either going to see the bullish harami or the hammer or something, or we see them really slam it where everybody's panic selling, and that's where you can make tons of money. And it's happened maybe a half a dozen times in my 40-year career where they just slam it down, and you can tell they're slamming it because every move is just straight on down, whether it's the market or a stock that you're watching. But then the nice thing is when you flip to your 5-minute and your 10-minute chart and you start seeing it churn after selling off huge, that gives you the prospect of them turning it around. And when you're buying down here, it doesn't take, there's times where you could be up 30, 40, 50, 60% on trades in the matter of an hour. Is there a specific marker when the margin calls kick in? You'll see it. You will see it when they gap it down, that everybody's having to sell immediately, and they see the market's not heading up. And this is what we're kind of looking for, is a gap down in the oversold condition at the bottom of a severe drop. That's when they'll just start cratering it, and then you get ready to jump in, and you're going to buy a lot of discounted prices. Let's see. Can somebody help Lori? All right, so let's take a gander at some of the commodities. Crude oil. This is I forget what the name of this signal is. But notice how they opened it here and traded up here. Opened it here and traded up here. This is usually short covering. Now what you watch for is if they open it lower and take it down, that means there's still a lot more downside in crude oil. Interest rates, bond prices keep moving up strong. Interest rates still heading down. I don't know how much lower they can go, but they're still heading down. Gold's starting to creep back up again, staying above the T-line and the 3T line, which means silver also, whoops, what did I do? Hit the wrong one. Silver's trying to work its way back up. Let's see, what else we got? Started coming into soybeans because it's after bottoming out here, then doing the stutter step. Now it's done the bullish engulfing signal. Watch to see if this doesn't start trading positive from here. Now they did sell it off near the close on the 5 and 10 minute chart, but they were well up in the bullish engulfing range on the daily chart. So this is a bullish engulfing signal after doing some bottoming action. See if it's going to break this downtrend. Now they reported, I think it was on Friday, that the crops were bumper crops, but not quite as big as what they were expecting. So that kind of did a lot of whipsawing. But notice wheat chart, kind of that little cup and handle setup. Stutter step. The stutter step is when you start up. What did we see? We just see a stutter step in. This is stutter step is when they start up and then they pull back without any real sell signal. Then you get another sell signal. Just the uptrend has that little stutter step in it before it takes off. Oh, let's see what else we got. The dollar. Well. Dollar's getting a little bit weaker here based on you had this big bearish Harami. Now you've got a Harami hanging man type signal, stochastics heading down. I would suspect they're going to start taking the dollar down a little bit. And let's see here, what else we got? Cattle. Well, cattle seems to be wanting to do a little J-hook type pattern up here. And I forgot what lean hogs are doing. Lean hogs just flat. Wouldn't be trading this one at all. But we did crude oil. Crude oil has this this type of pattern, which is usually more short covering. Watch for it to start trading down from there. All right, I'm trying to think if there's anything else that I've missed. Gold, silver, dollar, wheat, soybeans. I guess we got it all. No, this is not an operating system. This is aluminum. I don't even know how to get to aluminum. Aluminum. That apparently doesn't trade all that much. That is aluminum. F.AL. Let's see what that does. It's not going anywhere one way or the other. All right, and natural gas. Natural gas obviously keeps heading down. It's now in the sideways channel after being down for quite a while, because they've been finding a lot of natural gas. And I think even if we look at a much longer chart, natural gas has just been, there's just a lot of it in the United States right now. Okay, all right, let's take a look at some of the stocks that, now obviously in this market there's not a whole lot that is running up very strong, but our NQ is still holding up well because of this fry pan bottom type pattern. You stay long on NQ. Now the fry pans were showing up also in Ross Stores, even though it backed off at the end of the day. Notice the J-hook fry pan bottom. Still want to be watching this one on strong trading as long as it stays above the T line. Same scenario with TJ Maxx, another kind of fry pan bottom setup. Now these are very simple. Once you see a fry pan bottom in or setting up, you stay long as it stays above the T line. All right, and so what were we looking at? NQ. NQ has a nice little chart, and Nu Skin also setting up nicely. So you keep an eye on this one, because if this gets moving, it should come back up and fill this gap here at the $57 range, giving you a good good 20% move to the upside. Now we're also keeping an eye right now on TKMR, because it's sitting on this trend channel or the support level, and even though it traded off from where it opened, it closed right at the T line. But it was showing us over the last few days, we had a hammer Harami telling us the selling had stopped, doji, another hammer type day. If this trades up above today's open, you want to be buying, because you know where your probable next target is, probably the top of this channel. So anyways, it could have a good strong move from here. Let's see, some of the ones that, we did, let's see if I've got them in there. Yes, I do. Okay, I'll get to some of these. VCRA was one that has had a good, strong chart ever since we had the best friend Morningstar type signal. Now it's breaking through the 50 and this downtrending channel. This one you definitely want to be looking at on positive trading tomorrow. Some more of the longs that are working well. Here's another best friend gap up through the resistance level and through the 50. This is RNA, another one that can be bought. And SCLN, these are kind of some of David L's scanning finds today. Notice the inverted hammer, bullish confirmation, breaking out of this wave 2, going into wave 3. Moved from 5 to 7 1/4. It means you should be moving up to about 9 1/4 or so, giving you a good 35% return. TKAI, not a very, I guess apparently a very old, since not very long since the stock offering, but there's your little scoop type hammer bullish confirmation. This one you can be buying on positive trading tomorrow. ANFI, there's your long-legged bullish engulfing, spinning top, close above the T line, stochastics in the oversold area. This one you can get ready to buy on positive trading tomorrow, especially if they break through this downtrending channel. That's a good-looking chart. And somebody brought up ANGO today, which is another fry pan bottom breakout. You can be buying this one. And ANGI, Angie's List also is looking pretty decent. Got a little bullish engulfing signal right here on the T-line and the 50 telling you they're not taking it back below that level. So if they start moving this up, your first target is to fill the gap. Second target, obviously, is the 200-day moving average. And ALNY, which had a good chart because of the kicker signal today, this is the type where you can anticipate they're going to do a 45-degree, the same kind of trajectory of the original trend. After it's consolidated, now it's kicked back up. I'd look for it to do a 45-degree off of here. Now, obviously, the Ebola stocks are just running strong. I mean, these are the ones, this is why this type of chart pattern is very attractive, that you want to keep your eye on these kind of slow curve breakout situations. That's Lake, going from about $8 on the breakout up to $28 or higher. I guess it's higher than that, $29. APT, same type of chart, a slow curve, fry pan bottom, cup and handle, strong breakout. I started buying IBIO today on the basis that it was breaking out and had a decent day. But in a market like we're looking at right now, when everything's selling off like this and you've got a sector that is running strong, you just stay with it because everybody's looking for a place to put their money on a down market. And if they can identify that the Ebola stocks are the ones that are getting all the money, everybody's going to be piling into those. CLF, watching this to see if it can break up through the T-line after a doji gap up Morningstar signal. Look for this to at least pop up to the 20 and then check to see where it probably coming down through here and the 50. You have possibly a price move up to the $13 area. Uh-oh. Somebody wrote this and I won't be able to. Here's the one that's setting up for a J-hook pattern after a little left-right combo. ARC. You can be buying this one on positive trading using the T-line as your stop. And TGTX, getting ready. Looked a little bit more bullish on one of the other chart systems. But notice you had an inverted hammer, doji, stochastics just got into the oversold area. I'd be a buyer at 10. If they came up through there, I told you they broke this downtrending channel. And AVNR started getting a little bit of life in it today. Another one that's got a kind of a wedge formation. This one you can be buying on positive trading, or if you want to be real conservative, buy it if it comes back up through today's high. So those are some of the longs that look good. Now, in this type of market, that's why we started a few weeks ago saying have a few shorts as well as longs in the portfolio, because these are the type of charts that really do you great on the short side. When you start seeing these slow curves and then they just start bailing out, this was LNCO. Another one was P10. And these are just kind of examples of what you'd like to be looking for. Notice how P10 failed at the 50, and then started coming back down through the T-line. Those are the type you can be shorting, especially if you see the market's either getting toppy or the market's starting to sell off. You want to find the ones where you got the most strength to the downside. Blog was another one. Failure at the 50. Through the T-line, and every time they bring it up, they're failing at the T-line area. You just stay short, and the further they go down, the more you start watching for that big panic, what I call a blow-off day, where everybody says, just get me out of this position. Dougley was another one that's been heading down and then slowly rolling over. I wouldn't even doubt that they won't get this back down to the 200. Which would still be about a 30% move to get to that level. Fold was one that everybody was watching to see when it was time to get back in. Anytime you see where they've taken it up and then they close back below the T line, close it out. Wait for the next buy signal. There's a buy signal. It didn't confirm. Now it's doing kind of your downtrending kind of berry scoop pattern. These are the type too, when everybody starts pulling the plug, they just start whacking it to the downside. And you just use it very simple, that if you buy it on lower open, you shouldn't see it close back up above the 50 and or the T line. Oh, who wrote this one? LRN, that little rollover, kind of your doji gap down. Another one to stay short. And this is probably one you're going to see on the recommended list tomorrow for shorting. This is CRR. Notice how it's just slowly starting to turn down. Let's make this bigger. So this stock, let's make this flatter, has already come from 100 down to 50, and now it's rolling over again. Could have a lot more downside. Why do you want to short stocks that are in a down move? Because obviously there's no bullish sentiment in there, and if they keep showing you more strength to the downside, as we can see in CPA, this one's also got some prospects of going much lower. And what direction has it been moving in? Ever since they gapped it down, there's nothing stopping this one. There's nothing to tell us that this has already gone from 150 to 100, but they couldn't take this down to 50. Oh, and Tesla, this is why you want to observe the obvious. The obvious was a left-right combo. That should have been a warning. Anytime I see a left-right combo, I'm at least, even though it didn't close below the T line, I'm at least probably taking some off, because anytime you see a left-right combo, there's a prospect of a very strong move to the downside or upside, depending on which direction you're looking at. But as you can see, they moved right here from the 50. This is what your typical blue ice failure. And that little thing is just driving me to drink. How do I remove that from? All right, there we go. Notice what this did. Came down through the 50, came up, failed at the 50, and where did it go? I thought I just got rid of that. Right down to the next level. What is a left-right combo? You're looking at right here, a doji followed by a bearish engulfing signal, or on the other side it'd be a doji followed by a bullish engulfing signal. Just a very strong combination, telling you that's where the investor sentiment, indecisive, and now they've told you which way they're planning to take it. We're still short SGMS. Oops, hold on, let me grab. Okay. MGMS, kind of the doji sandwich after this bearish J-hook failure. If this is wave one, this should be taking us down into the $7 range. DDD had been acting good on the short side, popped up a little bit today, but this is still the same scenario as if it was bullish. Not only, even though it traded positive today indecisively, it still could not get up above the 3T line, let alone the T line. So you still stay short until you see a confirmed buy signal. And now the other one, XONE, what was I looking at? Oh, that's what I was looking at. Had come up, but now they might be failing back below the T line and heading back down again. Sale, we'd been short this one for a while. Oh, how did my charts get so flat? Today it did a Morningstar signal, But with the market heading down, you definitely need to see that it's confirming. Otherwise, you're in a downtrend and you see a buy signal and a close above the T-line. S-Fun was one that we recommended today, where they took it right back up and traded it right back down. So that's after this Morningstar signal and still a failure to confirm any buying. This one you can still short on weakness, because if we've moved from 12.50 down to 9.50, this should move down to about the $7 range, or again another 30 some odd percent down to the downside. QIHU, another one that we, QIHU. There's your kind of your bearish J-hook setup with a doji right here. I don't know what this is. But this makes this very simple. If they open this lower tomorrow, you start shorting immediately, because that means wave 1, wave 2, wave 3 is now in action, and starting with a bearish J-hook, a bearish doji sandwich. So this would be one that you could short immediately, and then you just don't let it close back up above the doji. Here's another example of why you have to wait to the end of the day. We've shorted GNW a couple days ago. And then we reiterated the short because it was doing a doji, but it opened positive and traded up here, which looked like a Morningstar signal. Oh, what was the previous stock? I forget. Oh, QIHU. And this one is GNW. But notice why you wait to the end of the day, because the market sold off and this one could not close back up above the T-line. See, we did CPA. CPA has this bearish J-hook pattern in progress. Next target could be down here, down close to the $90 range. And C's, we've been short C's. Whoops. Okay. Let's see. C's. C's is another one, just slowly rolling over. And this is in the mode of a bearish doji sandwich. Notice the failure again at the T-line. This is the one where they can just start whapping it to the downside. S-Fun, was that a close above or below the T-line? I don't know. If this opens lower, you stay short and just use the T-line as your stop. You shouldn't close above the T-line. All right, hold on to your individual stocks until we get to the end of when I tell Jim to do the double line. That's when you type it in. Okay, QUNR did a bullish Harami today, but notice it wasn't very compelling. Very simple. If it opens positive and you're short, you get ready to cover some of that position. If I opened positive, I would probably cover half of my position immediately. If it traded above today's high, I'd cover the other half. On the other hand, if it opens lower, you can still be shorting this because there's probably a lot more downside left in this one. And same scenario with CMGE. This one's been a good short. Now it did a bullish Harami, but we need to see confirmation. Notice what it used for a resistance level today, right at the 3T line. So there's still not a whole lot of energy coming into this one. VNet was another one that looked good a while back, but then reversed. This is your doji sandwich after a bearish Harami. This one can be shorted on weakness tomorrow. And VIMC, which one we held because we thought it was a good J-hook setup, but the kicker type signal, taking it back below the T-line, this one you should be out of and possibly even going short if this one opens weaker. But sitting right in the 20, it'd have to show weakness below the 20. CarMax, there's that bearish J-hook pattern, and notice what it did right here at the support level. Gapped through the support and went right down. So this, if wave one was about 9 points, 8 points, look for 8 more points to the downside. The education stocks have been getting hit. And when they all start getting hit, that means they're bailing out of all of them. This is EDU, that if it opens lower tomorrow telling you that the 50 is not acting as support, you want to be shorting this one. And there was another one, but I can't remember which one it was. We may have already looked at it. What? GNC, there's that slow curve. Anytime you see that slow curve, that's when the momentum starts picking up. And is this one of the education ones? That one's selling off pretty hard. Let's see, ESI. No, because I probably wouldn't have been looking at a stock that was trading below $5. So, okay. Anyways, right now with this market, we still have the prospect of a big, huge downdraft. And if you're short, you just keep staying short until you see the market. If the market hits a level where it's not moving anymore, go to your 5 and your 10-minute chart. And once that, if it turns there for 20, 30, 40 minutes and then starts up, that's the bottom. That's where you start covering your short positions and you start buying long positions as fast as you can. Oh, is that the other one, XRS? Yeah, that's broken down. Let me make this a little bit smaller. Yeah, that's more than likely going to come all the way back to the 200 right at this latest support level. There's Apollo education. Yeah, bearish J-hook type pattern. When the whole industry is getting sold off, that pretty much tells you that they're bailing out of that whole sector. TEDU. Yeah, ever since the big, huge bullish or bearish engulfing signal, then the bearish J-hook type pattern. Another one where you just stay short until you see a buy signal. Lope is another one. That's already, notice how that failed. Anytime you see a failure, start watching to see if there's going to be confirming selling back below the T-line. When stock bottoms, do we wait for a cross over T-line close? No. Larry, right now, if we saw this market, Dow start trading off and it trades off 400, 500 points, I mean, they aren't going to go down too much further. I'd say they aren't. If you see a big blow off where they're just selling everything, that's where you go to your 10-minute chart. And then when your 10-minute chart does some buy signals and comes back up above the T-line, that's when you start looking at individual stocks, especially the ones that have gotten hit real hard, and start buying those. And usually the ones that are getting hit real hard will be hit real hard on a day where, like the market, they're all getting creamed. Do you use market orders when day trading commodities? Yes. Because if I see something setting up, I'll immediately, and I see it setting up, breaking through, I'll go ahead and buy it immediately on a market order. Now, after I'm in the position, I'll look at where should this not come back if this is working, and then I'll put in a stop order at that level. Which would be the best choices in your experience to buy once it reverses? The ones that have been lowered the most, or the ones that are holding? Well, usually the ones that are getting creamed the most crystal are the ones that everybody's bailing out of, and then all of a sudden when they see that they're not bailing out of them anymore, they come rushing back into them. The ones that are holding up usually don't partake in the big, say, blow-off move, so people aren't rushing back into those, or they're the one rushing into the ones that everybody's just sold dramatically. Okay, any more general questions on candlesticks? Yep. Hold on for a second. I gotta change the direction of my air conditioner. How low do I think the Dow will go? Have no earthly idea. I don't know whether it'll ever turn around, or when it turns around, where it will go to. I let the charts tell me what to do. Morningstar signal needs confirmation. Most of the signals need confirmation. For a hammer or inverted hammer, do you normally wait the second day after the hammer to enter the trade? No. The inverted hammer, which is already in the oversold condition, is basically telling you that the buyers have stepped in, but then the bears knocked it back down by the end of the day. Now, if they open up positive the next day, you want to be buying immediately, because that tells you that the bulls are still there. And that's when the bears will start getting out of the way. And you've got a very simple stop on that one. If it comes back down through the inverted hammer body, you close it out, because if it opens positive, it means it should be going positive. Let's see. Drillers offshore, diamond offshore. Yeah, there's your inverted hammer. Now, this would have been scary, though, because if it came back down here, I'd probably have stopped out. But if I saw it was turning right around and coming back up, I'd buy back in again if I was playing this one closely. But that is your inverted hammer with a positive positive confirmation. Oh, I would suspect a lot of the oil stocks are just getting hammered. They're off huge. Criteria for getting out of a position is usually closing below the T line. How about hard stop? Do you stop out before closing time if the rate goes too far below during the day? Yeah, there's different examples of when you should be out of a trade. For example, let's see if I can find an example. If you were up in the overbought condition, I don't see any on this chart. For example, number one, you see a doji that far away from the T line and it opens lower the next day, you close it out immediately, because where do you think it's going to go to? Back to the T line. There'll be other times where you close right on the T line, and I don't see it on, right here. Right here, unfortunately, if you were long, you wouldn't have been long there. Let's find something better. There will be times where you're sitting right on the T line with a doji, and if it opens lower the next day, you close it out immediately. You don't have to see it that it's going to close, because we know the simple rule of the doji, it's going to move in the direction of how they open it after the doji. The last two closes, the candlestick was both above and below the T line. Which one is it? Lou, I don't last two closes, the candlestick was both above and below. It's where it closes, below the T-line. So this criteria was that if you saw an evening star signal, especially with a long-legged doji failing at the 50, that you want to buy it on weakness the next day. Well, the next day it didn't open weak. It opened up today up here, but then closed back down here. Same scenario. If it opens weak tomorrow, you want to, and again, both of them will be closing below the T-line. Okay, except the kicker. The kicker, yeah, you don't need confirmation. As a matter of fact, you don't even need the confirmation that it's a completed kicker. Anytime you see, I'm trying to find something, anytime you see that gap up above the previous day's open, and I've got one in my head here, but I can't. Now I forgot what I was looking for. No, I don't think IBO is a kicker. Now, there's no real kicker signal. It's more of a cup and handle. There was one. Bah, I can't think of it right now. I'll probably come across it as we're doing charts. This is kind of a trend kicker because you're already in the trend and it closes down here and gaps up. That tells you there's more upside. PBR a kicker. Yeah, that's your true kicker, where it opened here, closed here, gapped up, and went the opposite direction, especially gapping up through the 50 off the T-line. Tells you there's going to be more upside. Oh, we're finding all sorts of kickers here. BBD. Yep, another good-looking kicker signal. Tells you there's going to be more upside. Elliot, this is a trend kicker. Notice that your trend is already in progress. You got a trend kicker right here. Let me make this big enough where we can all see it. Notice how it opened here and closed here. The next day they gapped it up and then took it up. But it was already in the trend. It wasn't down here at a reversal stage. So those are what I call trend kickers, which means there's going to be more upside. Same scenario right here. Opened here and closed here. Then they gapped it up above the open and went the opposite direction, doing another trend kicker. Okay, I guess with that, Jim, go ahead and do the double line. And in 4.6 seconds, do the next double line. Okay. CMG, yes, that's a good-looking short. That could bring you all the way back down to the 200-day moving average. And Netflix also, kind of your bearish scoop type pattern, also could take you down to the 200-day moving average. Nally I'm not too concerned about. As long as it stays in this range and still paying, what is it still paying? About 14% dividend yield. Now, you can see kind of the support here and the support here. That means your next target is up here to the up toward the $12 range, which doesn't really mean much on this type of stock. You're looking more for that 14% dividend yield. And FAS, let's make this a little bit bigger. FAS, you just stay long right now with the anticipation they're going to come up and test this high, which would be right here at the 200-day moving average. Not a very exciting rate of return, but at least know which direction you're heading in. XZoom was a short. You stay short until you see a confirmed buy signal. Note what it did today. Even though it did a Morningstar signal, it failed at the T-line. So you definitely need to see how they open this tomorrow. If they open up positive, you close out the position, and then if it starts fading off, you can re-short it. I'm out of some of the WLL in the more aggressive long-term accounts, but getting ready to watch this to see if it bottoms, and we'll be ready to buy this again for long-term accounts. This is off approximately 50%, so I want to be ready to buy this on a, and usually when they pull off about 50%, that's where you usually see a reversal. BTU, another one that's trying to base. You stay short if you're short until you see a buy signal in to close above the T line. SXL, there's that slow curve and then slam. The slow curve is one of your best setups for seeing a big price move afterwards. Right now you stay short until you see a buy signal, and probably not for a while yet, or at least a few days, because your stochastics haven't even gotten down into the oversold area. This is an example of follow through. Whoops, did I do that wrong? KND. Yeah, let's see. I would hold this as long as it stays above the 50 and doesn't close below the T line. The gap up tells you there's some strength in here, and it's probably not moving with great enthusiasm yet because of the market. So if it closes back below the T line, you close it out. You can always buy it back on the next buy signal. And NVAX, that one I couldn't get excited about one way or the other. It's sideways, and it's really not going anywhere. JetBlue. JetBlue, there's your bearish J-hook pattern. You just stay short on this. RDNT, you stay long as this doesn't close back below the T line. And JCPenney, you get ready to buy this one on the next buy signal. They've been knocked out basically because of the market, and I think their next quarter earnings or last quarter earnings weren't quite as good as what they expected it to be. But I'd still be watching this because for a longer term trade, they've gotten some of their problems out of the way. Now they need to get ramped up a little bit. Con, wouldn't be long or short this one right now. The only way to short it is if it came back down through yesterday's or Friday's low. NXTD. All you can do with this is stay long. It has to open positive above the T line to stay in this one tomorrow. And PGR, stay short with the anticipation they're going to at least come down and test the 200-day moving average. EXXI is one of the energy companies that's been getting beat up. You just stay short on this one. I mean, this one's just had a huge 24, now down towards 7. You stay short until you see a buy signal. Oops, TF, Vladimir is not coming up. GPro also has had the wind taken out of it. And it looks like it's coming back to, son of a gun. Notice that they've gapped this down after some sell signals up here. I wouldn't be surprised if they don't hit the 50, which would kind of equate to this area right in here. Let's see, we did Netflix. This one, bearish J-hook look for the 200 as a target. Apple, I wouldn't be long Apple, or I wouldn't be long or short Apple right now. You're still stuck in this sideways wedge. There's no direction. Wouldn't want to be in this one right now. Not to say that at some point it's going to break out of that wedge. You just want to be ready to go whatever way it is heading. Another one where you stay short. Nothing you can do here except stay short and enjoy the ride to the downside. CMG, we did that one. That's heading for the 200. Facebook, if this opens weaker tomorrow, you've got a doji sandwich, which would then mean that this support area is pretty well broken. More than likely, you're heading down to the 200-day moving average. Starbucks, still in a downtrend. Wouldn't trade Starbucks just because it's become such an institutional trader. There's not a big magnitude of move in it. But if you're short, you stay short on this one. VJet, stay short. Now you did have a bullish Harami today in the oversold area, but you still have to close above the T-line to show there's any change of investor sentiment. And I think we did XONE. This one might be heading right back down again. This one, if you're long, you have to see it open positive tomorrow to stay in it. Las Vegas Sands, stay short on this one. You've got kind of that slow rounding top over here and a failure at the T-line again. Just stay short until you see a buy signal. Next target is the bottom of this trend channel, down here someplace. And TRW. That one's starting to roll over very slowly. This one you can short with the expectation that the 50 is going to be the first target, but you've got a lot of juice left in your stochastics. That could take you down a lot further. And UVXY. Stay long on this one. Just be careful once it gets to the 200. I'd stay short. Another one that's not showing any weakness. And here is something that I was going to point out again. I'm trying to accumulate as many observations as possible to put into our observations videos. Anytime you see that hammer type signal and they open it right back down into the tail, stay short or definitely close out your long position. There was a ECO. Whoops. What one was this? That wasn't it. And that wasn't it. What the heck was I looking at? Oh, there it was. I'm sorry. Notice how this was holding up and it did a hammer type signal. That told us the bears knocked it down, the bulls stepped in. If they open it lower the next day, that's a pretty good indication the bulls didn't have enough strength to take it up. You close it out. And ECA, over here, the same thing. Notice a little wedge formation and a hammer type signal. The next day they open it lower. You can be going short because that tells you the bulls didn't have enough strength to take it up any further. The bears are still in control. So those are just kind of simple observations. Let's say the Russell 2000, just still heading down. VSR, that's a long-legged doji. I don't know what the volume is on this, but you can be buying this one on positive trading tomorrow. And Foot Locker, get ready to short this one. That more than likely it's coming back down to the 200-day moving average. There's a little gap to fill in this area. That would probably give it enough steam to get down to the 200. I think the Russell, the Russell 2000 is IWM. If Apple announces a new product tomorrow, see which way it breaks through the through that wedge formation, either up or down. Baidu stays short. That little slow curve has the prospect of taking you down to the 50-day moving average. Okay. All right, we're right now at 9 o'clock. So with that, tomorrow, remember, don't get sucked into jumping in things just because they open up positive like we saw today. Until we see that confirmed sell or reversal signal, you want to stay short. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow.